China borrows at the negative rates for the first time. China is catching in on fears that the West's faltering economic recovery will keep interest rates near record lows for a long time. The Chinese government issues debts at a negative interest rate for the first time on Wednesday in a bond sales that attracted significant investor interest, according to Deutsche Bank, one of the banks that helped arrange the transaction. Faced with ever lower interest rates at home, European investors snapped up the bulk of the debt as they seek to against exposure to the only major global economic expected to grow this year. The Chinese sale, which attracted final orders of about 16 billion pound for the 4 billion pound worth of bonds on offer, included 5 years debt priced with a yield of minus 0.152%. China also sold 10 years and 15-year bonds with yields below 1%. Investors include central banks, sovereign wealth funds, and global asset managers spanning Europe, Asia, and the United States. European investors accounted for 85% of the 15-year debt and about two-thirds of the shorter-dated bonds, according to Deutsche Bank. It shows investors are still underexposed to China, and there definitely is a scarcity value perceived in these bonds, said Deutsche Bank's head of China onshore debt capital market, Sam Fisher. European investors seized the opportunity to invest in debt at yields higher than what is available in Europe, where the central bank has slashed the interest rate to record lows and pumped over 1 trillion euros into financial markets to cushion the blow from the pandemic. Yields on 5-year German government bonds were around minus 0.75% on Thursday, according to Refinitiv. The debt sales also indicates that investors want more exposure to China's economy, which is recovering from the pandemic at a quicker pace than Europe and the United States, banking sources said. The insurance demonstrates that international investors are full of confidence in China's strong economic rebound and its future developments, despite the lingering global COVID-19 pandemic. David Yim, head of capital markets for Greater China and North Asia at the Standard Chartered Bank, said in a statement, following a historic contraction in the first quarter of 2020, China's economy has rebounded rapidly, with industrial productions and retail sales increasingly strongly last month. Meanwhile, sweeping restrictions in United States and Europe to curb a spike in coronavirus cases threaten to tip those economies back into recession in the fourth quarter. In a statement posted to its website, China's Ministry of Finance said that the bond sales reflect China's determination and confidence to open up to the outside world and further integrate with international capital markets. This is China's second major international debt sales in as many months, after it raised $6 billion in October, including from U.S. investors. Last November, the country sold bonds in euros for the first time since 2004, according to Alan Overy, which advised on the offering.